Prices in Greater Vancouver rose for the third time in a row last month, officially making it a trend. And what's most fascinating about that is that the rate of the appreciating prices is actually accelerating. And also, inventory, still the story. Inventory has actually gone and done something we've never seen before in history. So you're definitely going to want to stick around to hear us talk about that. And what's really fascinating as well is that this is all happening at a time where the interest rate environment is exactly the same as it was 12 months ago, that started basically bringing down prices. And yet rates are as high as they've been in the last few years here, and prices are actually accelerating. So what's changed and who's buying? We're going to get into all of this and more on this episode of the Vancouver Life Real Estate Group podcast and YouTube channel. So really excited to bring you all the news, all the recent history, and all the data, and of course, what's happening behind those scenes. And if you have a question about what's going on, well, we're always happy to talk real estate. So just reach out to us at any of the contact information that you can see below here. So let's get into the stats. What happened last month? What happened in April of 2023 here in Greater Vancouver real estate? Well, we always start this off with sales. How many units actually moved in the marketplace? And in the month of April, we saw about 2,740 homes sell. Now, that's up from the previous month. It's up about 8% from March. And similar to prices, it's the third month in a row where we've seen an upward trend. Of course, looking back a year when things were red hot and much more active, it is definitely down from there. We're down about 16.5% from April of last year. And because of sort of where we are with our numbers, with our low inventory and with the lower sales, we're still well below what we typically see. So we're about 15, 16% below our 10-year average. But let's look at the sort of more macro picture here, because it's also relevant to point out that last month's sales were the highest amount of sales volumes that we've seen in 11 months, dating back to June of 2022. And this is a very interesting data point as well. Last month was the first time in 4 years that we saw April sales being higher than March sales. The last 3 years, previous to 2023, March sold more homes than in April. Things started to cool off after that. So we've seen an acceleration going into April. And realistically, that may very well happen in May as well. So we are in consistently unique times. And Ryan's going to dive even further into what's going on here.
Yeah, we've had 4,307 properties listed this month. And that is, just like kind of Dan mentioned here, lower than March by about 30 units. The last 3 years saw lower listings in April than in March, and this is actually a 30% decrease compared to April of 2022. And I think that there's some reasoning for this too. I mean, some of these numbers, when we look at year over year numbers, like these year over year decreases in new listings, a 30% decrease sounds like a tremendous amount. However, we also had a lot of people that were chasing the tail end of the top of the market this time last year. So your baseline effects are definitely going to look a little skewed year over year, mostly for that reason. Right now we're 22% below the 10-year seasonal average too. We're typically about 5,525 listings, and we're at 4,300, right? So we have, I guess, the question that I'm thinking is this is supposed to be the spring market. This is where we're supposed to see a flood of inventory, and we just haven't seen it. And you'll see quickly here as we talk about the sales to active ratio, just how quickly things are selling too. So it's, a function of these low baseline effects. And then on top of that, we've got tremendous amount of demand in the marketplace, even at prevailing rates. It's pretty stunning.
Is it possible that inventory has already peaked for the spring market, which would kind of be terrifying, because inventory, as I mentioned off the top here, is doing something very unique. We're at just over 8,200 listings right now. And what happened is we actually have less inventory today than we did from April. So from March. March down to April actually decreased. And that almost never happens. Almost never. The only two other times in history where we saw less inventory in April over March was in April of 2009, aka the global financial crisis, when people were very scared and were definitely not aware of what was going to happen in the future. Banks were collapsing, bailouts were happening, and people just kind of took their homes off the market to be a little bit protectionist and kind of have a wait and see attitude. The second time inventory ever dropped in April was COVID lockdown, when we definitely didn't know what was going to happen next. We didn't know if we were going to lose hundreds of millions of people. And we certainly weren't going to sell a home when we thought whoever we sold it to would come into our home, see it, and maybe get us sick and kill us. So, two very dramatic markets, GFC and COVID. And now we're seeing a similar behavior in an environment that's far more actually optimistic. So, super unique what's going on there. The second thing that's never happened before with inventory that we're in right now is this is the 5th month in a row where we are sub 9,000 active listings, but inventory has basically been flatlined. Sure, inventory drops typically December, January in the slower season and then picks up, but we've been flat basically since December. It's 5 months now where we've seen, give or take, maybe 5-6% in inventory. It's a very unique chart. You can go back as far as the data exists and you will not see any other 5-month continuous period where this has happened before. Since December, we're only up about 800 units. So actually a little bit more than 5%, maybe like 8-9% here. When you look at what's been similar historically, there was a somewhat similar graph in 2016 and 2017 for this era. And guess what? Those were two of the hottest years on market, hot being when we saw price appreciation going up at a very rapid rate. So inventory, let's go back a little bit further. We're down only about 4% from last year and still well below that 10-year average by 21%, not adjusted for population growth. So if we're sitting here at basically 20% below 10-year averages, listings are coming in at pretty much 20-year lows. It's really setting us up for, again, a continued tight pressure market where it seems like anything half decent that hits the market is getting a lot of attention. And the people that want to buy and can buy are buying. And realistically, they're fighting for it in the form of bidding wars and over ask sale prices.
So it's like, you've got total inventory that's moved up by 10, call it 10%. But without a doubt, the buying population has grown by way more. So it feels like a significant disparity in terms of available property and the demand for it. And I think that's getting exacerbated by the sales to active ratio. So you guys, if you're really wanting to pay attention in terms of where prices are going to go and how quickly homes are going to sell, the sales to active ratio right now is in a very strong seller's market. We are 33% right now on the sales to active ratio. That's up 2% from last month and up 20% in 3 months. That's how quickly things have changed, right? So all property types, if we break it down by condo, townhome, and detached, 24% seller's market for detached homes, 40% for townhomes. And again, I think the demand for townhomes is so strong because of their price point and being able to be in the same neighborhoods as those detached homes. But, like we've seen over the last sort of 3-4 years here, the prices for detached homes, even though they've corrected, still remain way out of touch for most people. And then we sit hovering just beneath the 40% at 37 for apartments here. So apartments, we're seeing a ton of listing agents holding offers now, getting multiple offers. The same is taking place on the townhomes, and for the odd detached, we're seeing it too. But my goodness, Dan, the townhome and apartment segment is it's a fist fight for property at this point.
It really is. And it depends, of course, where you're looking to, because I'll definitely say if you're looking in a lot of areas of Surrey, Langley, and you're after a detached home, it is incredibly aggressive. Where my client who's looking in that area, we're looking up from between 5 and, no joke, 64 offers per home right now. And yes, that 64 was an outlier because it was aggressively listed, 300K under market. But seeing double digits on basically anything at like that 1.2 to 1.5 price point in specific neighborhoods. So very strategic time. You have to be working with a professional who knows how to navigate that type of environment, because it is, it's a war right now.
Well, the
And
last thing
so,
too. Well, the only
yeah,
last thing I'll
please.
say to that, Dan, is if you're sub 1 million, if you're trying to buy something under 1 million, you need to get pre-approved. You need to go through this process again, like you'd seen in the last 2 years. Get pre-approved. Get your inspection done before the offer date. Get reading the strata docs before your offer is due. You've got to have a clean, very clean contract in order to be considered today. And it was only 3 months ago where I was hosting open houses and hoping somebody would come through, and now we're at a place where property, if it's been sitting, it's getting a ton of attention just because it's the only thing left again. So here we are again, right? Yeah, I just need to follow up with that.
Yeah, no, it's a very important fact. And the sales to active listings ratio is such an important metric because it literally dictates where you can expect prices to go next. And so if we're well in a seller's market and we're seeing a 20% change in just 3 months, prices do follow that. And the April numbers really exemplify this fact, because just last month, the HPI, which is a lagging indicator, rose 2.5% in 1 month, making the average home $1,170,000. And I have to say, well, a couple things. First, 2.5% is the type, like we should see that a year, not a month.
It's
And that kind
huge.
of number, right, is what we saw in sort of the ultra peak market of 21, 22, and also back in 16 and 17. So the fact that we're seeing it now in 2023 in this environment with 4.5% overnight rate is remarkable. And when I talked earlier about the fact that the rate of price increases is accelerating, well, think of it like this. We just saw 2.5% in April. Go back to February, it was 1.8. And then back in March, it was 1.8. And February, it was 1.1. So you can see that rate is increasing here. And if you add those together, we're up 5.3% in just the last 3 months. That's a huge
That's
number.
that's incredible, Dan, because Korea has come out and said that they expect prices to fall in 2023 by 5% and then to recover by 5% in 2024. And yet, in the first 4 months of the year, we're up 5.3% in the Vancouver market. So,
Unbelievable. I mean, look, my prediction was we were going to end the year down 1%.
yeah,
3 months in, I
yeah,
was way off.
yeah,
I am very surprised. I did not expect to see 5% lift in homes back in January. I don't think very many people would
no.
have. If you look at it this way, homes, the average home here now is up $56,000 since January the 1st. So if you were thinking, okay, well, I'm going to save and I've got a great job and I'm putting away $10,000 a month to buy my new home, you're actually falling behind. Now, again, that's a very short window and a very sort of biased way of looking at it, but it's also factual in a sense. So when the rate of appreciation right now is going up at about $14,000 a month, it's definitely worth paying attention to. Again, if you were thinking about holding out for the bottom of the market, well, that was January. So where's it going to go next? Well, we'll talk about that more. Now, compared to last year, yes, prices are down. We talk about things when they go up. We talk about things when they go down. We don't have a bias either way. Yes, we're realtors, but at the end of the day, we're here to share the facts with you. So from last April, home prices are down 7.5%. HPI, let's take a look at this though. HPI is now down 8% from the peak. It bottomed out at 14%. So we've already seen a pretty significant comeback here. And let's keep in mind, the HPI is a lagging indicator. It takes from the median and the average, and it's got its own hedonically adjusted algorithm. But basically, we're down 8% from the peak. So let's have a look here at what happened with our median prices, because median prices are up $20,000 last month and are now sitting at $970,000. That is the fourth month in a row that we have seen the median price increase. It is up $100,000 since December. It is the highest we have seen this metric in 10 months. We are above where it was back in May of 22. And keep in mind here, we are now, when looking at the median prices, only 3% off the all-time high, which was $1 million. Okay, now let's add in average prices, because average prices went up 30,000 last month and are now sitting at $1,298,000. It is up for 3 months in a row now and is up 130,000 in that same 3 months and is only 3.5% from the all-time high. So if HPI is a lagging indicator and it's at 8% under all-time high, and then you take median and average, which are just around 3% under the all-time high, it gives you a very clear indicator of where you can expect HPI to go next. It lags about 3-4 months, meaning if we go status quo, you're going to see HPI at only 3% under all-time high by about August. Pretty fascinating. Now, again, anything can change tomorrow, but our current trajectory with all these other metrics is pointing up, up, up for the immediate future.
Dan, I want to explore a little idea with you, just because there's going to be people out there who are thinking that this could be a dead cat bounce, right? Where we're going to see prices have fallen, they're rising again now, but they're rising for in the short run to fall further later on. And the way that happens is all of a sudden sellers think that they can get the number that they were hoping to get. Over the last 9 months, they were unable to. The market is recovering. Now all of a sudden I get what I want. So we're going to see this flood of listings hit the property market, and buyers are going to be able to pick them up. And that's going to cool prices. If not, it could push prices down. At least that's the theory behind the dead cat bounce. Do you foresee prices doing something like that in the near term?
The demand that we're feeling right now and the fact that things like housing starts are pulling back, to me says we're not going to see any type of significant dead cat bounce. That's based on what's happening today. Sure, they could go and raise basis points, or raise interest rates 200 bips at the next announcement. That would change things, obviously. So based on today's metrics, no, we're going to see continued upward trend. We won't see 2.5% month over month over month here and end up 20% up this year, but we are going to see more of a general increase. And I guess the main reason I say that is because, look, you look at all the cycles within GVRD real estate, and you look at all the demand suppression techniques that have come into play. Okay, we had the foreign buyer tax come in that turned into the complete foreign buyer ban. There was the mortgage stress test, and then that got exemplified. There's empty homes tax in place right now. There's what else do we have? Sorry, there's the rent controls that we have. And then 425 basis point increase in rates. And all of these things that have been implemented over about the last 7-8 years to suppress the demand. And here we are again. All those still exist. Some of them have been expanded upon. Rates are 425 points higher than they were a year and a half ago. And yet prices are up for the third month in a row and are only 3% under all-time high. The insatiable demand for GVRD real estate is proving itself once again. And it doesn't matter what gets thrown at it, it looks like there's always going to be a segment of the market who can not only afford to buy, but do buy. And so it's hard to say that, like, again, until the next tax they're going to throw at this thing or the next kind of suppression technique, it'll be another blip in the market. And then it looks like it will continue again. So that's my long-winded answer to your question there.
No, it's a good answer, because at the end of the day, we're trying to balance the idea of, do we have enough inventory for the demand that's in the marketplace? And clearly we don't. But I believe that even if we had a bunch of sellers flood the marketplace, I don't think prices would really change. I think they might, like you said, they might blip for a month or two as buyers absorb that inventory, but then we're going to head right back to where we were. I mean, we reported last month that there was over 100,000 new permanent residents in the last 2 months alone. They're coming to BC primarily, as well as Ontario, Montreal, wherever the jobs typically are. And we just don't have enough homes and density to deal with those numbers. So, even if we did get a significant uptick in terms of listings, I think it would get eaten up, is my opinion. Right. And I think we would be back to a similar place. So
totally agree. And there's something else I want to share that's super important, because again, people always reference like, oh, you talked about the 18% mortgage rates back in the 80s and things were different then. Yes, of course. But think about this metric then. The Housing Affordability Index, which takes in all the elements that we as humans need to survive, right? What's our shelter cost? What's our food, et cetera, et cetera? What are interest rates, everything else? And it takes a snapshot of where we are and basically boils it all down to a percentage. And right now, today, the Housing Affordability Index, is at 45%. It's actually on its way down right now, meaning things are becoming more affordable. In this cycle, it peaked at 51%. So affordability is actually improving right now. That's partially because of interest rates or mortgage rates have come down a bit. Prices have come down, of course, from the peak. And let's keep in mind here that, okay, I told you it peaked at 51%. Well, this metric has been around for over 40 years. And keep in mind here, 1991, the Housing Affordability Index was at 54%. Meaning it took more of your income to buy a house then, your basically disposable, your net income in 1991 than it did today. Okay. It was harder, it was more expensive to buy a home in 1991 than it was today. But here's the kicker. Look at the chart. Home prices were going up in 1991, 92, 93, and so forth. So even as hard and as crappy as it is to try and buy a house here, it's still happening. And yes, it's likely the higher end of the income bracket that are doing this, and they're going to continue to push prices up. But look, housing was more expensive. Housing was less affordable in 1991, and yet prices were going up then as well. So that to me is another metric that will likely result in at least a bit more of an upward trend here, and I guess ultimately not a dead cat bounce scenario here.
Right on. Okay, let's talk about how long property is taking to sell, because this is also a great indicator for a lot of people, especially if you're listing your property, in terms of what you should be expecting, prevailing rates and prevailing attitudes. So, average days on market, 11. That's selling quick. I think it's important to provide a little historical context here too. Before Vancouver, was extremely popular, you could expect your home to take somewhere between 3 and 6 months to sell. In many different markets around the world, that's the average, right? We are looking now at 11 days, a week and a half to move your property. And that's down from 13 the month before. So we were just under 2 weeks. Now we're a week and a half. But for even more context, 3 months ago, it was a month. So things are accelerating in terms of behavior. People are getting more aggressive. People are waiting less time to buy their homes. And sellers are selling quicker and quicker and quicker. It all kind of spells to me like we're in recovery. That's kind of how I see this. Whether you want to admit it or not, whether you were expecting a bigger drop or a harder time, this market continues to baffle my expectations with its resiliency. It really does.
It does, and it's we talked about the demand suppression techniques, and another one that's kind of quietly in existence, and quite a almost terrifying number, if you will. This chart just came up from Toronto Housing, and the Ontario government taxation on new homes has now surpassed 30%.
It's like we want things to become more affordable, right? And yet 30% of the cost is tax on a brand new home.
30% of what you're paying is tax, and that's increasing. If we look all the way back to 2012, it was about 25%. So the taxation on new homes is increasing by about 0.5% a year in Ontario. In BC, I believe we're closer to about 25% today. But again, new taxes are created, as we know, almost on a quarterly basis here to try and suppress demand. And where that money's going, we're not entirely certain. It certainly does not feel like it's going to affordable housing, rent-controlled properties, etc. So it's getting tight.
It's going to fuel up Trudeau's jet. Sorry.
So while we're recording this on May the 4th in the morning, a little bit of a maybe our best estimate here as to where things are going to go for the rest of at least this month. We're still basically at 9,000 units total inventory right now. There is absolutely no spike in inventory coming, and at least not this month, I don't believe. And of course, it looks like that's going to keep the market incredibly tight. We're getting into May now. Once June comes around, the focus on real estate really starts to fall off, and we're going to hear, likely crickets come July kind of thing. So if you're waiting for inventory, I can't even tell you when to expect this. You'd think with rising prices that maybe people that were holding out might start to list for sure. I think that's very much a possibility, though that will likely be a trickle and not like just a waterfall of houses coming to market here. And while 3.5 days of metrics is not much to really make a super hard forecast on, I will tell you right now, median and average are pushing up again. And median as of today is like 1.5% under all-time high. Let's let the month wash out, but still, it gives you an idea that it wasn't like, hey, the last 4 months of median increases were just a fluke, because here we go in May, they're on their way up again as of right now.
Yeah, May is typically a very good month in terms of transactions, in terms of price appreciation and all of that. Historically speaking, the second or third week of May is usually one of the best weeks to be selling your property all year. So it'll be a very interesting month when it flushes out at the end. Really interesting to see how it compares to the data we talked about today.
Yeah, we saw 2021, 2022, May sales were lower than April sales, just like April was lower than March. And here's 2023 bucking that trend. If I had to make the call today, I believe May sales will outpace April sales, again, being a very unique market. So it's just the insatiable desire right now to purchase, and the lack of anything decent is still going to just get tremendous attention.
Yeah, and I think, when we look at the first quarter of last year, when we were seeing decent sales volumes and stuff like that, right, as the market was peaking, again, when you compare them to where we are today, it's a very different story. And the stats are going to seem quite extreme in terms of their year over year swings. And that's going to continue throughout the rest of the year, because as the year progressed in 2022, as we got later into the year, we got less and less sales volume, right? So you're going to start to see, predominantly some sales volumes, I think, continue to increase now, because people are going to be getting better numbers. And the sentiment in the marketplace isn't terrifying like it was, 6-9 months ago. The sentiment is changing quite dramatically.
That's a great point. Sentiment drives so much of this market. And when you're out and about right now, people actually feel largely optimistic. At least that's what we've witnessed here within our group of buyers and sellers. I think things are trending in a positive direction. Right or wrong, sentiment is what it is, right? Perception is reality. And that is partially going to drive people's decisions here, whether they want to list or not.
Yeah.
Perfect. Okay. I think that's a great place to wrap it up here. That is our April update for Greater Vancouver. Thanks as always for tuning in, and we look forward to sharing more info with you next week. Have a great day.